Hello, everybody. Welcome to Outstanding Ohio Home Buying 101. I am excited to have you here today, and I'm going to be going through the answers kind of to help you answer these top 10 questions. Whether you're a first-time home buyer or maybe it's been a while, it's important to understand kind of how the market's working these days and how to best position yourself to be ready to buy in this market. So we're going to cover everything from how is the market down to what should you know about writing an offer. And then we will have time at the end for any questions that you may have, or you can try to pop them in the chat and I'll try to keep an eye on that as well. Okay, so let's get started. How is the market? That is, of course, the question on everybody's mind. I get it a lot. And I have pulled data for Copley, Fairlawn, Bath area. And this data is, if you're looking in a different area, I'm happy to pull the data for the area that you're looking in, but this is pretty representative of what's happening throughout Northeast Ohio. So this is homes for sale and homes sold over the last 4 years. And you will see that the homes for sale have steadily decreased year over year, every year, except the middle of last year, we started to see a little tiny inching above the year before. So it's starting to get, the inventory is starting to get a little bit higher, but like tiny little bit. It's really very low inventory compared to what it was several years ago. And then as far as homes sold though, this chart's a little crazy, but my takeaway here is that despite the inventory being so much lower every year, we're selling a pretty similar number of homes on a monthly basis, sometimes more than previous years, sometimes less, but it's selling pretty similar numbers of homes. And then I've got a couple other charts here with average dollars per square foot and average days on market. So the pricing has been steadily increasing. As the inventory has been so low, it's driven the prices up. So every year for the last 4 years, the pricing has been going up and up. What's happening now is it's starting to soften a little bit, where we're seeing maybe decreases on a like month over month basis, but not year over year. So we maybe aren't as high at the end of 22 as we were at the beginning, but it was still higher than it was in 21. So this line has not yet crossed the previous year's line. Still very strong pricing in the market. And then average days on market, as that inventory has been low, that the number of days to sell has been low, and similar to the inventory, that there was a cross of the green line, if you will, over the red line. So 22 was just slightly higher than 21, but still very quick selling period. And a lot of this is largely dependent on the area that you're looking in, the condition of the home, and the price. So those three things are going to dictate how quickly the home will sell. And we're still seeing instances of it goes for sale over the weekend in a couple of days after it's listed, multiple offers over asking price, but it's not as crazy. It's, maybe there's 2 offers instead of 10, and maybe it's a couple thousand over asking instead of 20,000 over asking. So it is kind of like coming back down from that standpoint. But there are houses that aren't moving as quickly. They might be overpriced, or it might be just a price point that moves a little bit slower. So there are some houses that are taking a little bit longer to sell and having to do some price reductions and so forth. So the other question is, when is the best time to buy? And I think people get caught up in like trying to time the market. And the important thing to note is that you are not, this isn't like you are investing in a stock and you're trying to find the right time. This is your home. Like, you're trying to find a place to live and that works for you. So this may sound a little cliche, but the best time for you to buy is when you're ready, when you find a home that works for you, and when you can afford the monthly mortgage. Like, those 3 things, if those are aligned, don't get caught up on what's the rate today and what's the seasonality of when more homes sell than another. If this is a good time for you to buy right now and you can afford the monthly mortgage and the home meets your needs, then it's the right time for you to buy. And some things to be thinking about: there's kind of financial aspect to it and then a practical aspect. So from a financial standpoint, can you get pre-approved? Do you have the funds for down payment and closing costs? And can you afford that monthly mortgage? So those 3 boxes really need to be checked to make sure that you're financially ready to buy a house. And don't forget, there's other things, once you own the house, there's other expenses too. So don't max yourself out so much that you don't have money if something were to break, or for any of the fun stuff like painting or new carpet or things like that. But then on the practical end of things, is it a convenient time for you and your family? Do you have the time to search and see houses? And do you have the mental capacity to handle the stress? It is going to be somewhat stressful. Even the smoothest transaction, this is a big decision, a big purchase, and it can be stressful. And, you know, like I said, some houses are still selling in a weekend. So you might have to have flexibility to go see the house when it gets listed. You know, if you have kids in school, like, do you want to wait till, if you're switching school districts, maybe it's better to move in the summer than another time of year. So consider all those factors, kind of the practical and emotional factors of what works best for you and your family, along with the financial piece. And remember that you can always look at options to refinance later to reduce your monthly payments. So they say, date the rate and marry the house. Find the house that you love. Make sure you can afford the mortgage now. Don't max yourself out and like count on it lowering later. There's a good chance sometime, if you're going to be around in that house a while, sometime in the next 30 years, the rate's going to drop. But in case it doesn't, make sure you can afford that payment now, but know that you can look at refinancing later. And a lot of lenders now are offering options where they'll pay the cost of refinancing in the next couple of years. So just have that kind of in your back pocket and as a consideration for when you're trying to decide when the best time to buy is. Okay. What about the process and how should you get started? So this is a very high level overview of the process. But the first thing you need to do is you're going to want to partner with two professionals that are going to help you through this journey. One being your real estate agent and two, your lender. And a little chicken egg as far as which one you want to contact first. But before you start looking at houses and be getting ready to write offers, you're going to need pre-approved. And in order to be pre-approved, you're going to have money for your down payment, for your closing costs, and have to have decent credit. So knowing your credit score, knowing that you have money saved up for a down payment is an important piece of that puzzle. And just to put it out there, though, there is still, it seems like a pretty big misnomer about down payments, that people think they have to wait till they have 20% saved up for down payment. And that is not true. In most cases, you can get a conventional loan for, I believe, as low as 5% down payment. You can get some other loans for 3% or even 0% down if you have certain occupations and so forth. So there's lots of options out there. So it is good to talk to a lender to know what you could qualify for. But at the same time, you need to talk to a real estate agent so that they can help you through the process. We're going to talk about why you need an agent and how to choose one on another slide. But once you have the agent that you want to work with and a lender and you've gotten pre-approved, then you can start searching for homes, finding that home that meets your needs. When you find the one you love, you can write an offer, which we're going to go over all of that, how to make a competitive offer. If your offer is accepted, when your offer is accepted, there are a couple things that offers are typically contingent upon. And one of them is the home inspection. Now, that's your choice if you want to do home inspection. I do encourage you to do that. That's your opportunity to have a professional inspector come in and kind of see if there's anything you didn't notice with the house that's maybe hidden, or uncover any major issues so you know what you're buying. And if you find something, you can try to negotiate that with the seller, or you always have the opportunity to back out of the deal at that point. And I'm going to be doing a separate video on this, on like how to negotiate inspections and how to be thinking about that. But that's a big kind of hurdle to get past. Once you're under contract, you want to do an inspection and see if there's any issues, and then is there any negotiation from that. And then secondly is the home appraisal. So if you're getting a loan, which most people are, then it's going to be contingent upon the home appraising for the value that you are offering. And so if it's a $200,000 house and the home only appraises for $195,000, the lender's only going to loan to $195,000, and you're going to have this $5,000 gap. This was happening a lot when the market was a little crazier. I don't expect it's going to be happening as much, but it could happen depending on how crazy you're getting with price points. So, and then the appraiser is also going to check for any like major health and safety issues, and they may require some repairs as well in order for the loan to go through. The lender needs to be comfortable with this house that they are lending the money on. And then you are going to close the sale. Now, closing is basically, you're going to sign your life away. You're going to have to sign your name a whole lot. and paying the money, which is going to be a wire transfer. And we're going to talk about what kind of money you need to have and all the expenses. But at the date of closing, you're going to sign and you're going to transfer the money. And the house gets then recorded and transferred into your name. Now, the day that you move in and take possession could be a different day. A lot of times it's the same day, but in some cases it could be a couple of days later. It could be even up to a couple of months later. If the seller has requested additional possession time and you've agreed to that, there could be this period of, it's kind of called like a rent back or a lease back, where you own the home, but the seller's still living in it for a period of time. And then you might get possession later. So that may or may not, the closing and the possession and getting the keys and moving in may or may not be the same date. So that gives you kind of a high level of what the process looks like. And now we're going to go a little bit deeper into some of the different aspects of this. So yes.
Can I ask a question real quick?
Sure.
When it comes to the pre-approval process, one of the things that I have heard from clients that I've tried to refer out to speak to a realtor is the concern that the pre-approval process requires a hard pull on your credit. And if you can't find a house within a certain amount of time, then you have to continue to get pre-approved. And what is the real impact on someone's credit score when they're getting these hard pulls for pre-approvals to buy a house?
Yeah, that's a great question. I don't know that I have the exact answer, but I've heard that before as well. I don't think it's a huge impact. I also think that there's some lenders that if they trust that you haven't had any major changes, that they'll extend the pre-approval without an additional credit pull. Or have an initial conversation with you. Like if you have an idea of what your credit is, you can call up and say, hey, I think my credit score is X. This is what I have in savings. Do you think I could get pre-approved? And they could give you an idea. They're not going to be able to pre-approve you off of that, but they could give you an idea of like where you stand, or no, you've got some work to do, or let's check in again in 6 months or something. So, yes, it is a concern, but I don't think that, and we're going to do a mortgage 101 and we'll talk, I can ask that question specifically. In a couple of months, we're going to do that one, but I don't think it's a huge impact to the credit, but I guess if your credit's bad, it could make a difference, right? If you're on the bubble.
Yeah, thank you. I thought the same thing, and that's what I have educated people on, but yeah, thank you for sharing that.
Yeah, of course. Okay, so how long does the process take? There's kind of 3 components to this. How long does it take you to find the house and get your offer accepted? That could vary depending on how unique of a property you're looking for, how picky you're going to be, how broad your criteria are. And then once you get an offer accepted, that time between acceptance and closing is typically 30 to 45 days is kind of the standard. And then, like I said, there could be additional possession time after that. So if you're in a lease and you're trying to figure out, well, when should I start looking? It's probably going to take at least 2 months-ish from the time, like if you account for 2 months from the time that you find a house, but you have to add the time to find the house. And you could find a house in a day, or it could take 6 months or a year, depending on what you're looking for. And I have some clients, I call it the unicorn. Like you're looking for a unicorn here, and it's going to be a while. Like I have one that I've been working with for, I think, going on 2 years, and there's still been only maybe 1 or 2 houses that's even matched her criteria, and then she wasn't even interested in them. So if you're looking for a unicorn, you got to brace yourself. It's going to be a while. But if you're able to kind of loosen up your criteria and say, well, I prefer to be in this city, but I'm willing to look in this city too. Or, don't have like real strict parameters on minimum square footage and things like that, which we'll talk about. But, and then how aggressive and willing you are to be, with the offers too, to get your offer accepted. So that's unfortunately like an undefined piece of the puzzle. But I would say, if you allow, and of course, depending on the time of year, because there is some seasonality to the inventory, there'll be more options in some months versus others. But I would allow a couple of months, like 2-3 months minimum for finding the home. And then you can, a month to a month and a half to get from contract to close, and then potentially some extra possession time on the back end. So I hope that helps you like rein in and understand like when you should start the process. And I can also, once I understand your criteria, look and see, okay, there's, typically 20 houses a month that are going to match that criteria, or 2 or 100. That'll give you an idea of how many options you'll have and give you a rough idea of how long it might take you to find that house. And the other thing is that realtor is there to represent your best interests. If you decide to go directly to the seller's agent, for example, they're representing the seller. They're not watching out and negotiating on your behalf. They're negotiating on the seller's behalf. So you want somebody that's going to represent your best interests and make sure that you get what you want and so forth. So, of course, we have the experience, we understand the conditions, we can help make sure you don't, that you offer a competitive price, help you through negotiations, both upfront and with inspection negotiations, make sure all your contracts are good, like all that stuff. But the other thing is just having the same person work with you throughout the whole process is important. Meeting with somebody upfront to do that buyer consultation, to have them understand your needs, somebody that you are comfortable with and that you can trust, and that will work with you throughout. So I've heard people say, well, I don't want to bother a realtor because I'm like not that serious right now and I don't want to waste their time. And I get that, to a certain extent. But here's the thing. If you just call the number on the sign or whatever number comes up on Zillow when you're looking or whatever, first of all, that person's going to probably be hounding you. And the more information you put out on different sites, the more people you're going to have calling trying to get your business. So it's not great, right? But secondly, if you call a different person every time you want to go see a house, you're wasting all of those people's time. And we only get paid when you close. So if you're going to, this person go show you a house, and this person goes shows you a house, and this person goes shows you a house, and then you buy from the fourth person, the first three people don't get paid anything. So I guess what I'm trying to tell you is waste one person's time and not everybody's time, because that's our job. It's not a waste of our time. It's our job. And so if you are working with a realtor too, we can go, if you're going to commit to us and be exclusive to us, we're going to go above and beyond for you as well. So like, for example, I'll send postcards on behalf of my buyers if they're looking in a particular development to say, hey, I have a buyer. Are you thinking about selling? Give me a call. So we can go above and beyond to do things for you if you are going to commit to working exclusively with us. So that's my 2 cents on why you should use a realtor. It really is helpful, particularly if with the way the market's been, if you wait for an open house to come up to go see the house, it's very well might be sold before the weekend, before the open house even comes. You can use a realtor and they'll show you the house when it's convenient for you. And there's just a lot of other benefits to using a realtor. How do you choose an agent? Here's some things to consider. My opinion. First and foremost, are you comfortable with them? Are they honest? Which, may be hard to tell, but do you feel like they're honest? Do you trust them? So that I think is so important, that this is, one of the biggest transactions of your life, and you want to make sure that you trust them and you're comfortable with them. Secondly, and this is a very close second, probably tied for first, are they a good communicator? Do they answer their phone when you call, or do they get back to you in a timely fashion? Do they, educate you and inform you and things like that? Another consideration, are they an individual agent or on a team? And both, I would venture to guess both are going to tell you why it's better to work with whichever one they're doing. Like, I'm an individual, so I'm going to argue why it's better to work on an individual, and the team person might argue why it's better to work on a team. But the difference is probably with a team, there's more of a chance that you're going to be working with multiple people throughout the process. So you might have one agent that you do the buyer consultation with, another agent may show you the house, a third agent may be tracking the contract from contract to close. And there's pros and cons probably to both, but just know, are you working with an individual or team, and just so you know who you're going to be working with. And I guess kind of related to that is, do they show the houses themselves or do they have a showing agent? So for example, I am an individual agent. I try to show houses myself whenever I can, but if I'm not available, I'm not going to be the reason you didn't get the house because we didn't get in time. So I'm going to get another agent to go show you the house. I'm still your agent. I'll write the offer, I'll negotiate, I'll do everything else. But if I just couldn't make it that day, I'm going to have somebody else show it to you. But by and large, it'll be me showing it to you. Some agents have a showing agent and you're going to only deal with the showing agent. So just know, again, who you're going to be working with and make sure you're comfortable with that person as well. What is their process? Do they offer buyer consultations? What resources do they have available to help you through the process? Will they go above and beyond to help you find a house, like some of the things I said with postcards and whatnot? Do they have experience and expertise in the area that you're interested in? Sometimes this isn't as important. If you're familiar with the area, then, the agent doesn't actually have to be like so experienced in it, because we're going to run comps and data and so forth, no matter what area you work in. But if you aren't familiar, if you're coming from out of town or something, you might want to make sure that the agent that you choose has experience and knowledge about that area that maybe you don't have. And then last is, what is their experience and reputation? So read their reviews, see what their clients have to say about them. That always gives you a good idea of what you're going to be getting yourself into. If you have a friend that can refer you to somebody, great. Of course, I'd love to work with you, but it doesn't have to be me. I'm just encouraging you to work with an agent, pick one, and find one that you are comfortable with. Okay, what does it cost and who pays what? So there are certain kind of checkpoints throughout the process where you're going to owe money. So I just want you to understand kind of the total, but also like when it's coming due. So the first thing that you have to pay is earnest money. That's going to come due likely like with 24-hour immediately to like, let's say up to 48 hours after you get under contract. This is like good faith money to the seller that you're serious and you're planning to move forward and you're going to put some money against this. In our market, it's typically 1%. So if you're looking at a $200,000 house, it would be $2,000. And you're going to pay that either by check or electronic transfer from your bank account to likely to the title company or maybe the realtor that like holds it. So it doesn't go directly to the seller. It kind of goes into holding until we find out what's going to happen with the transaction. That is not incremental to your down payment. So if you put a 10% down payment on a $200,000 home, $20,000, this is like the first $2,000 of the 20. So that when you go to pay the down payment at closing, you'll only owe 18 and not 20. So it's not an incremental cost. It just comes due at a different time. So that's earnest money. The second thing, if you get an inspection, which usually happens in the first week or so after you go under contract, you are responsible for paying for the inspectors. So a general home inspection might be $300 to $500. If you have sewer, well and septic stuff that you need inspected, that's going to be extra money. If you want to do a pest inspection, so radon inspections. So depending on what inspections you do, you're going to have to pay the inspector directly at the time of the service. So within that first week, probably, less than $1,000, let's call it 300 to 1,000, depending on who you use and which inspections you get done. And then the other thing is your lender probably has some kind of a loan application fee and or like an appraisal fee that you have to pay up front, typically probably around $500. And again, that's going to vary depending on your lender. So that's kind of the upfront stuff that you have to have those funds available. Then the down payment, of course, that's the big chunk, but we talked about it doesn't have to be 20%. Maybe it's 5 or 10, whatever that is, minus the earnest money, that's going to be due on the day of closing when you're signing and you're going to electronic transfer and wire that money over to the title company. And then in addition to the down payment, there's other closing costs. These can include additional lender fees, which might be $1,000, couple $1,000, discount points. If you paid to like buy down a rate, anything like that, you're going to have to pay that at closing. The buyer's agent transaction fee, which we talked about, which could be a few $100s. The homeowner's insurance, you have to pay your first year of homeowner's insurance at closing. So you're going to have to pay that all up front. There's something else called prepaid daily interest. So I think people they talk about you don't owe your first payment until like the following month. So it seems like you're living in the house for free for a month. But the truth is they actually calculate how many days between closing and when your first payment is due. And they figure out how much the interest would be for those days. And they make you pay it at closing. So that's another expense you're going to have. And then title insurance and fees. Those can total like around, I think, 1% or so. So when you add that all up, depending on what you're doing with discount points and lender fees and all that, rough and tough, 3 to 5%. And your lender can help you really detail what you're going to need for that. So that's at closing, you're gonna have your down payment and your closing costs, and they will give you a breakdown of all of these costs a couple of days before closing. So you can see exactly what you're getting charged, who it's going to, and make sure you have the right amount to transfer. And then, of course, once you own the house, if you got a loan, you're going to have your mortgage. And if it is less than a 20% down payment, you could have something called PMI, which is private mortgage insurance. That's basically the bank's way of mitigating their risk of like, okay, you're not as strong of a borrower because you didn't have 20% down. So there's maybe a higher chance you're going to default. So we're going to charge you this extra like tax, if you will, called PMI. And you keep paying that up until you have equaled at least 20% of the purchase price. So it's not forever, depending on what kind of loan you get, but you could have that tacked on top of your monthly mortgage. The property taxes are probably going to be looped into your mortgage on a monthly basis, your homeowner's insurance, and then if there's any HOA fees. And of course, again, that doesn't include any rainy day funds, the roof has a leak, you know, anything else you need for home ownership. So you want to make sure you're saving some money for that. So that's on the buyer side, a little bit more detailed. On the seller side, like we talked about, the agent commissions do come out of the seller's proceeds. They also have title insurance and fees. A lot of the title fees get split 50-50 between the buyer and the seller. And then they will pay like prorated taxes and HOA fees for basically it gets shored up for the amount of time that they've lived in the house, because taxes are paid in arrears. So they might not have paid taxes yet for the last 6 months that they lived in the house. So they have to pay that. That comes out of their proceeds at closing to get shored up on that. The seller's closing costs are going to be probably 6, 7, 8% rough and tough. So they've got a hefty chunk of closing costs that they are responsible for. The difference is that, you know, by and large, that's getting deducted from their proceeds. So they don't have to have like cash out of pocket to pay these closing fees like you do as a buyer. So that's an overview of who's paying what and what does it cost to buy a home. All right, so moving on to some of the more fun stuff, how should you search for a home? So one thing to understand, there's kind of 3 ways to find a home. If it's in the MLS, if it's for sale by owner, or if you're looking at land or new construction. So MLS stands for multiple listing service. That is where most properties are going to be listed for sale. And that will feed basically any other website that you don't really go directly to the MLS to search. You're going to go to some other website to search listings that got fed from the MLS. So whether that's Zillow or Trulia or Realtor.com or Howard Hanna or EXP or Remax or joeshouses.com, whatever your favorite place to search is, it's basically all coming from the same source. So just understand that. Where it gets tricky is that although it starts as the same data, they sometimes do their own interpretations of it, or maybe they don't update it. Some of the sites don't update them as quickly as others. So one site may look like it's still active, but it's really under contract. Or the terms they use for when it's under contract can get goofy. So if you're ever in doubt about it, call your realtor. They can look in the MLS and say, yes, it's still active, or it's under contract or whatnot. One of the sites that I've been told is updated a little bit more directly from the MLS than other is HomeSnap, which has an app. So maybe check that one out if you want to look at that. So that's the MLS, which is, I think 99% of the listings or something like that are in the MLS, but you're going to have some one-offs where people are going to try to sell their homes by themselves, and the for sale by owners, or FSBOs, as we call them in the biz. Those are a little bit more, you know, here and there. So you could either see the sign in the yard, maybe if you're driving around the neighborhood. I think there's like some for sale by owner.com type websites. Some of the owners will list on Zillow, so you might see them on Zillow. And just know that your realtor, if you're working exclusively with a realtor, can also help you out with these. So if you see a for sale by owner that you're interested in, they can schedule a showing for you. They can help still, you know, with the contract and negotiations and everything else. So, and, you know, your realtor, I try to keep an eye on for sale by owners as well to see if they're going to be a good fit for my clients, to keep an eye on those. And then the third piece is land or new construction. So if you are considering building, your realtor can also help you out with that, whether you see a random plot of land somewhere, or maybe it's a development being built, your realtor can help you navigate that as well. So with that being said, search criteria. To be thinking about. Location is obviously a very big one. They always say location, 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 right? And whether that's, you know, you're thinking about commute times to work, or how far you want to be from friends or family, or schooling, how far to the grocery store, do you want to be in a more rural area or in a neighborhood? Be thinking about all those things related to location. And then school district, if you have kids that you want to send to public schools, which school districts, you know, is there one that you absolutely want, or a couple you would consider? If you don't have kids, still kind of a consideration in terms of resale value. But on the flip side, some of the higher school districts are going to have the higher priced homes. So if you don't care about school district, you may want to consider some areas that have lower ranked schools, because you're probably going to get more home for your money. So just something to be thinking about there. Price range, I think pretty much everybody operates with their max price. which is probably going to be what you get pre-approved for. Maybe go a little bit higher because you might be able to, it's starting to be that you might be able to offer a little bit less than asking. So if you're pre-approved for 250, maybe put 260 into your search, or 275 at the most, I'd say. And then you can put a minimum price range, not as necessary, but sometimes that weeds out the like complete dump fixer uppers that you might not be interested in if you're not looking for that. So, you know, maybe put 85,000 or 100,000 as your minimum if you're looking at 250 houses. Minimum number of bedrooms, minimum number of bathrooms. If you have an absolute minimum that you need, put that. Square footage, same thing. If you know, like, I really don't want to live in if it's less than 2,000 square foot, or a lot size. Again, if you're renting or you haven't lived in a lot of homes, you might not even have a good feel for like what's 2,000 versus 2,500. And the truth is that sometimes they're not all created equal. You go into one 2,000 square foot house and go into another, and based on the layout or the use of the space, and, you know, do they have a dining room and a living room and a kitchen and a family room? Like, it might feel that might be 4 very small rooms versus maybe there's another one that has an open concept kitchen and family room that feels a lot bigger, even though it's the same space. So don't, because the inventory is so low, I guess what I'm trying to say is don't limit your, don't put so many criteria out there, because you want to have some options. And it's not like you're going to have hundreds of options, but you can sort through the 10 options that you might be a match and say, oh, that one's not going to work for me, or maybe this one could. So if you're not absolutely set on like you need more than an acre, like leave the lot size open and just be open-minded, because sometimes a 0.2 square foot that backs up to woods is going to feel a lot different than a 0.2 acre than a 0.2 acre that like has houses on all sides of it. So just keep in mind that. And then style of home, if you have a strong preference that you absolutely need a ranch, or you absolutely don't want a ranch, or a split level or a colonial or something like that, you could put that in. But again, I encourage you to try to keep that as open as possible, just so you can see all the options. Okay, but then, so then you've set up your search and you get some matches. How should you evaluate them? Of course, reviewing that listing information online and the photos is key. We're so fortunate to have that access that we don't have to go out and see all these homes to get an idea if they might be good for you. How does the price feel for you? Property taxes is one that it can actually vary quite a bit from city to city, even neighboring cities. So that's another, of course, piece of your budget that you might not be thinking about. When you get pre-approved, they're going to assume property taxes at a certain level. So just know to factor that in. Location, like we talked about, in addition to like, you know, how convenient is the location and how close is it to different things that are important to you, you can go into Google Maps and look like, is it right next to a power plant? Is there a railroad running through the backyard? Is it on a corner? You might be able to get a feel for like, what do the neighbors' houses look like? That type of thing. Size and features, condition, and then some of the things that I think we forget, let's say we forget, but we don't prioritize as well because it's not flashy and exciting, is the age of the mechanicals, the roof, the siding, the windows. So how old is the furnace? How old is the hot water heater? How old is the roof? Because if any of those things need replaced anytime soon, those are tens of thousands of dollars in expense. So don't get so wowed by the shiny granite countertops and realize like the furnace is 30 years old and it's going to go any day now. So, and that's something that it's, you know, the agent may remark, put it in the description. If it's not new, they're probably not going to comment on it. But you can have your agent ask, or if you go to see the house, you can look at the serial numbers and try to decode it and figure out how old they are. Do some research. So in addition to the property taxes, different cities have different city income taxes, and that could vary by like basically around 2%. Some townships have no city income tax, and then other cities might have 2%. You're paying a tax to the city you live in, sometimes in addition to the city that you work in. Sometimes there's reciprocity. So that could be, again, a swaying factor between one house and another if they're in a different city. Just something to be informed about. We talked about school system, commute time, what's nearby. Is there anything big to note in utilities, like what cable and internet providers are available there? Is this city known for really high water bills? Is there anything weird about the utilities you need to be considering? And then you can do some research on crime. You can look on the police websites and see how much crime there's been in that neighborhood. You can call the police and ask them about crime in the area. You can look at like the sexual offender map to see if your next door neighbor is a sexual predator. So there is some research you can do around crime. And then, of course, going to see the property. So if all that other stuff checks out and you're like, I think this could be the one, if you have the luxury to do a drive-by before you do a showing, that's great. Because sometimes the drive-by you can just cross it off from the drive-by because, hey, it looked great online, everything looked great. But when I drive by, I see that the next door neighbor is a hoarder and their yard looks like a junkyard and there's no way I could live next to that. Or I don't know, they have a big dog and I'm afraid of dogs or whatever, right? So, or the driveway is like way more sloped than you thought, or the backyard's like way smaller than it looked in the pictures. So do a drive-by, get a feel for the neighborhood, get a feel for like the house and the surrounding areas. Maybe you didn't catch that there was a, railroad track, or you can hear a lot of highway noise. Those are the kind of things that you can pick up when you're doing the drive-bys. But let's say you did the drive-by, you still think it's the one. Call your agent, text your agent, set up a private showing at a time that's convenient for you, and go see the house. Or you could go to an open house, but again, I encourage you not to wait around for open houses. If you're a super casual looker and you're like, there's no way I'm ready to buy right now, sure, go to the open houses. But if you're like, I think this could happen in the next 6 months and you're pre-approved, like don't necessarily wait for the open houses. But if you do go to one, just let them know you're working with an agent, that's fine. And then virtual, if you're out of town or something, or if you're moving here from out of town, we can set up like virtual Zoom showings and things like that to have you see the house. And then of course, compare all the houses you're looking at and take notes, because sometimes if you see a bunch, they all start to like blur. And so take some notes on what you liked, what you didn't like, any concerns you had, questions you had, and so forth. Okay, getting down to the end here. What should you consider when writing an offer? So you found the house that you love, you think this might be the one. How do we make this happen? And it's really good to talk about this with your agent up front before you get to that moment, because it can be very emotional and stressful. And so you don't want to be having these conversations for the first time, which is why I like to do upfront buyer consultations. So how, you're going to be thinking about how much are you willing to pay for it? How are you going to pay for it? What's your offer going to be contingent on? When do you want it? So that closing and possession date. Are there other offers? So that's a big piece of the puzzle, and how you're going to position your offer, and how much do you want it? So how aggressive are you going to be on this? So I have put together this chart that has levers of an offer and kind of a good, better, best scenario that particularly if you're in a multiple offer situation, is good to understand, like maybe how your offer might stack up against other opportunities. But even if it's not multiple offer situations, I think this chart just helps you understand all the aspects of an offer and the types of things you could potentially offer or be thinking about. So the first 4 here above the line have to do with the money. How are you paying for it? And with regards to purchase price, what I was telling my clients in the height of the seller's market is, if you like it and it's only been on the market a day or two, and this is still like to a certain degree true, you're probably going to have to pay at least asking price to get it. If you know you're in multiple offer situation, it's almost guaranteed you're going to have to pay above asking to get it. It's just a matter of how much above asking. And so that's where something called an escalation clause can come into play. It's kind of like bidding on eBay. So let's just say the listing price is $200,000 and you are willing to go up to like $220,000 to get this house, rather than just put the offer out for $220,000, because maybe you could have got it for $205,000 or $210,000 because you don't know what other offers are out there. If you know there's other offers out there, you can submit your offer with an escalation clause that says, I'm going to pay you $200,000, or better yet, like $202,000 or something a little bit higher than the asking price. And my max price, my walkaway price, like I like to think about it, is $210,000, for example. That's the price. I like to tell my clients that what's the price at which point your stomach is going to be churning if you go past that, and you're not going to be able to sleep at night because you feel like you way overpaid for the house. But what's the price that if you didn't win the house and you heard somebody else got it for that price, that your stomach's, you're going to be upset about that. So it's hard to figure that out sometimes, but think about what your walkaway price is. Like, this is the most I'm willing to pay for this house. It doesn't have to be the most you can pay, but what does that house feel like it's worth to you? And again, don't be focused on you're trying to get the best deal. Like, this is an investment, but it's also your home. So like, how important is it that you live in that home? and what's the most you're willing to pay for it. So anyhow, you say, okay, I'm willing to pay 202 is my offer, but I'm willing to go up to 210 by some increment, by $2,500 more than the next person, or 1,000, whatever that increment is. And I can help you with some strategies on that. But then if there's another offer that comes in at 205, they can put your escalation and say, okay, you said you'd pay 2,000 more, so now you get the house at 207. Still less than your max. And it kind of gives you that opportunity, because when there's multiple offers, they don't come back and try to negotiate with you. So you have to kind of upfront tell them, this is what I'm willing to do. So that's about price. How you're paying for it, the best, most preferred way from a seller's standpoint is if you have cash, which most people don't. But there are some people out there that will put up cash, and it's amazing that they'll do it for $200,000 houses and $1 million houses. Where they're getting this cash from, I'm not sure. But if you are up against a cash offer, it's going to be hard to beat them. Just know that you're likely going to lose out unless you're willing to pay a lot more. But short of cash, the next best preferred lending situation is a conventional loan with a trusted and reliable lender. So if they've got two offers with conventional loans and the agent knows this lender and knows that they close on time and are a good lender, and this one's like they're not so sure about, they might steer their clients more towards the one that they know is more reliable. And then outside of conventional loans, FHA and VA loans in the height of the seller's market, they were having a really hard time getting offers accepted. It's getting more prevalent to have those offers accepted now with the FHA and VA loans. And then earnest money we talked about, typically 1% of the price. That's typically going to be refundable if the contract falls through for something that the contract is outlined in the contract. So something comes up in inspection, for some reason your loan doesn't go through. Those are probably the two main ones. Something happens with the appraisal that you can't negotiate, then you are going to get out of the contract and you'll get your earnest money back. You're not going to get your earnest money back because you had cold feet and you changed your mind. That's a case where the seller may say, okay, I'll let you out of the contract, but I'm going to keep that money. And then, other scenarios, maybe if you're trying to be more competitive, you could increase that amount, or you could even make it non-refundable. Like, I'm so serious about this that I'm going to give you $5,000. And if anything happens that I need to walk away, you get to keep it. We're not that crazy at this point in time in the market that we're not seeing a lot of that. So you're probably going to be fine with 1% of the purchase price refundable. Closing costs. So, historically, it was fairly common for a buyer to ask seller to pay for some of their closing costs. And it took me a while to get my head around this, because it's like, geez, the seller's already paying like 6 or 8% of closing costs. Why would they want to pay some of the buyer's closing costs too? But like I said, the seller it's not money out of their pocket, it's out of their proceeds, and it is money out of the buyer's pocket. So in cases where the buyer is asking the seller to pay the closing costs, it's likely that they don't have the cash up front to pay those because they're already got the down payment and other stuff. And so it's kind of a way of looping those closing costs into the loan. And I tell my sellers to think about it like, hey, if they offered you $200 and they're asking for $5,000 of closing costs, think of it as an offer for $195. Like, you have to kind of net it down because that's what you're going to end up getting proceeds from. And you may want to, if you need the seller to help pay for the closing costs for whatever reason, you may want to, if you can, increase your offer. So, hey, I'm going to pay you $205 because I need you to pay $5,000 closing costs. So I'm still paying you $200. Something to think about. But more typically, if you can, I would suggest, paying your own closing costs and just keeping it out of the transaction. And then when things were getting extreme, the buyers were actually offering to pay part of the seller's closing costs to try to get a deal in multiple offer situations. So that could happen, probably not happening so much these days. And we're seeing more buyer requests for sellers to help with closing costs, to like pay down rates and buy down rates and things like that. So those are the 4 things that have to do with price. And then 2 things regarding dates, which we've kind of already covered. That closing date, when you sign and you transfer title and you pay the money, can be different from the possession date, which is when you get the keys and can move in. If you are getting a loan, your lender is likely going to want you to occupy that house within 60 days after closing. So that's the most possession that you could extend to try to be competitive. And then the 3 things at the bottom are the things that your contract is likely going to be contingent upon happening. So we talked about inspection. At the extreme, People are in some cases still waiving inspections entirely, or more standard is that it would be contingent on, and I say passing inspections, but getting, you get the inspection if you need to negotiate a couple points, whatnot, but like getting through inspections. They're in between is if you're not willing to waive, but you still want to do the inspection, but you're trying to compete in multiple offer situations, you can offer to say, hey, it's contingent upon an inspection, but it's for informational purposes only. My intention is not to ask for any repairs, or you can put a cap on the amount of repairs you're going to ask for, or a minimum. Like I'm only going to ask if it's like $5,000 or more. Like it's got to be a major thing for me to make an ask. Otherwise, I'm willing to accept this house as is. So that's kind of the in-between for inspections. The other minor detail there in the asterisk is consider the inspection timeline. If you can do it quicker than like a 7 to 10 day period, and the seller's comparing offers, this is probably not going to be the deal breaker, but it could. If everything else is very similar and you're saying you can do your inspection in 3 days and the other offer is 10 days, that's appealing to the seller, because if it is going to fall out of contract after the inspection, if you back away or you can't come to terms, they can put it back on the market quicker. So if they find that out on day 4 instead of day 11, it's helpful to them. And then appraisal. So we talked about that it has to be contingent. Typically, if you're getting a loan, contingent on appraising at or above the purchase price. Cash offers typically don't have that appraisal factor. So that's another reason why cash offers are preferred. And we were seeing situations where buyers were offering to bridge the appraisal gap up to a certain amount to try to compete. So if you do have some extra cash and you are willing to do that, if you think that might be a concern, if you're starting to get into high price points that maybe it's not going to appraise, you could say, hey, I'm willing and able to cover 2,000, 5,000, 10,000, whatever amount of appraisal gap, which essentially means you're going to have extra cash at closing because, again, the lender is not going to loan you that amount. And then lastly is contingency on sale of another home, which was highly discouraged during the height of that seller's market, because if you said, hey, my offer is contingent upon selling my home, and the chances are the other 9 offers they're looking at don't have that, and you're just going to be thrown out off the bat. But we are starting to see that come back more frequently, where they're saying, okay, here's my offer. It's a great offer, but you have to, kind of wait for me to sell my home within this certain period of time. Obviously, it's best if that's not the scenario, if it doesn't have to be contingent on another sale. If it does have to be contingent on another sale, the further along in the process, the better for the seller, less risk. So, hey, I'm going to make this offer contingent upon selling my home, but it's already listed. It's already listed and past inspections. It's past inspections and appraisals. So like the further along you are, the less risk or concern it might be to the seller, and more chance they might accept that offer. So, that's home buying 101. I covered a lot. Probably not every little thing that you need to know, but a lot to just hopefully get you comfortable with the process, with what it entails, without completely overwhelming you. I am going to put this recording out on YouTube so you can watch it again if need be. And my upcoming webinars, I'm doing Home Selling 101 next month on March 15th, Home Appraisals 101. I'm partnering with a local appraiser to kind of answer your questions about appraisals. That's on April 19th. And then Home Mortgages 101, which I'm really excited about, with a local lender on May 17th to answer all your questions about lending fees and rates and credit scores and all that good stuff. And then I also have some additional resources, both on the home buying and home selling stance, out on my website, ohiohomeselling.com, or you can check out my YouTube channel, Outstanding Ohio. If you do have a home currently, I do have a video on should you buy or sell first and how to kind of think through that process. I've got videos about appraisal gaps and escalation clauses and a bunch of different stuff out there. I just threw a couple of examples to help further educate you and prepare you for the process. So thank you so much for attending. Is there any questions at this time?
No, this was so informative, Erin. It was really a great presentation.
Oh, thank you so much. I appreciate you coming. I'm gonna